little company that started in a warehouse in El Segundo is now going public with the largest IPO that ever.
In a single morning, SpaceX raised $75 billion. It is the largest and fastest injection of capital in financial history, pricing the company at an estimated $2 trillion. To understand how insane that is, look at the previous record holder. Saudi Aramco raised $29 billion, but they had to pump oil for 80 years to get there, backed by $20 trillion in proven reserves. SpaceX, meanwhile, operates at a $5 billion annual loss. This massive deficit has split the smartest investors on the planet right down the middle. One side looks at the math and sees the most expensive financial bubble ever inflated. The other side insists they are buying the equivalent of Amazon in 1997. But both sides are missing the real mechanics of this IPO. A single share of SpaceX represents 3 distinct business models bundled together into one corporate structure. And this entire $2 trillion house of cards balances entirely on achieving one highly specific, incredibly difficult mathematical threshold: $200. Let's break open the balance sheet. The first piece of the company is the rocket division. Despite dominating the global launch market, this division loses roughly $3 billion a year. Every cent of that loss is being actively burned on the research and development of their mega rocket, Starship. The second piece is Starlink. This is the quiet cash machine of the ecosystem. Operating at a 63% profit margin, Starlink's satellite internet revenue is what actually foots the bill for the massive losses over in the rocket division. Then we have the third and most surprising piece, xAI. SpaceX absorbed this artificial intelligence startup at a massive 78 times revenue valuation multiple, completely eclipsing the valuations of competitors like OpenAI or Anthropic. You have to ask why the most valuable private entity on Earth would structure itself like this. Why tie a rocket builder, a satellite ISP, and an AI software startup into one tangled knot? It has nothing to do with exploring Mars. This corporate structure is a highly calculated response to a severe physical limit approaching right here on Earth. AI requires a massive physical footprint, with high-density server racks that run hot enough to distort the air. Terrestrial data centers are consuming vast amounts of electricity, driving up U.S. power bills, and evaporating localized freshwater supplies by the millions of gallons, just to keep the hardware from melting. The engineering solution is to put these data centers into orbit. Up there, solar panels capture sunlight 40% more effectively, with zero atmospheric interference or cloud cover to interrupt the power grid. This diagram shows the fatal physics flaw of that plan. Space is a vacuum. With no air or water molecules to carry heat away from the hardware, heat gets trapped. The environment acts like a perfect thermos, baking the servers in their own waste heat. The only way to dump heat in a vacuum is by attaching massive, dense metal radiators. To cool just 1 megawatt of computing power in orbit, you have to attach a radiator weighing 100 tons. That extreme weight penalty hits a hard economic wall. Using the current Falcon 9 system, launching cargo to orbit costs about $2,700 per kilogram. At that rate, lifting a 100-ton radiator would immediately bankrupt the data center project. This is the exact reason Starship exists. By achieving 100% rapid reusability and running on highly affordable methane fuel, the rocket is designed to forcibly compress the cost of spaceflight by 93%. That drops the launch price to exactly $200 a kilogram. At that specific threshold, the massive expense of launching heavy metal radiators into orbit is completely offset by the money saved on earthbound electricity and water. This flowchart demonstrates the ultimate symbiosis of the company. Starlink generates massive capital. Starship uses that capital to subsidize its R&D, forcing logistics costs down. Once launch costs hit that $200 mark, Starship can affordably launch xAI's massive servers, allowing the company to own every single layer of the orbital internet. But this creates immense vulnerability. If Starship fails to achieve full reusability, the cost per kilogram won't hit $200. The physics remain unsolvable, the economics break down entirely, and the orbital data centers never leave the ground. Conversely, If terrestrial telecom competitors successfully undercut Starlink, that crucial 63% profit margin vanishes. Without it, the R&D cash flow dries up, stalling Starship's development in its tracks. Which brings us to the IPO itself. Allocating an unusually large 20% slice of the largest capital raise in history directly to retail investors leaves you with two distinct possibilities. Either the founders genuinely want the public to share in the upside of the next internet generation, or they need retail investors to provide maximum exit liquidity at the absolute peak of the market. Buying this stock means taking a highly speculative financial position that our planet is quite literally running out of power, land, and clean water. The fate of this entire $2 trillion valuation rests squarely on hitting $200 a kilogram. That single metric is the thin line separating a viable orbital computing industry from the most expensive illusion ever sold.